Hi everyone, I'm Mike Prado, Portfolio Manager at Hillside Wealth. Pleasure to chat with you today, and we are going to talk all about taxes and how to plan forward for your retirement when it comes to incorporated business owners. So the old playbook back, pre-2016 days was start a company, have a bunch of shareholders that are family members, and then make a whole bunch of money inside the company, and then split the profits with your various family members and pay as little tax as possible moving forward. And then things started to change. A new government came in, and we started, in 2017, we had this new tax on split income, or the TOSI rules. And then, so they sort of shut that door and made it, not necessarily shut it, but made it much more difficult to do. And then they started doing things like forcing business owners to, or companies to declare or report any transactions that fell under certain categories. And then they also, any taxable income that was generated within the company, but not from operations or active business income, was treated differently from a tax perspective, and actually made things more challenging from a tax perspective within the company. So they did all of these different things, essentially saying, look, like, we don't want you saving money inside your company. We want you paying it out and paying your taxes. And then finally, in 2024, what they've done is they've introduced the new capital gains inclusion rate. So now a capital gain inside your company is taxed at a higher rate than it otherwise would be if it was personally. So if we follow the bouncing ball, what we're seeing is the current administration is making it more and more challenging for incorporated business owners, incorporated professionals, to use their company effectively as a tax savings vehicle, or an ability to save money in tax. There are still some advantages, but they are getting more and more sparse, and they're becoming less and less impactful. So really what this is telling you is that it's time to sort of reconsider or develop a new playbook for how to move forward for you and your business. Certain things that come to mind are definitely time to start looking at maximizing RRSPs on an ongoing basis if you haven't already done that. Things like individual pension plans are becoming more and more attractive, and also things like permanently held life insurance held within the corp. So these are all different ideas that require more and more investigation to see if it makes sense for you in your future. But the long and the short of it is, the landscape has changed. The old ways to navigate it are no longer nearly as effective as they used to be, and it's time to really reconsider and reevaluate what you're doing from now on. So what we would suggest you do is to explore this, be open to it. Please feel free, reach out to us, book a 15-minute call just to kind of get a feel for whether or not this is something that you want to move forward with and explore further. We certainly encourage it, because taxes are a huge part of every business owner's life, and we want to make sure that we save as much money as we can, both today and in the future, when it comes to income taxes. So with that, thank you so much. It's been a pleasure. Please reach out if you have any questions, and take us up on our 15-minute complimentary, no obligation review. Thank you.